Ladies and gentlemen, good day and welcome to the Q2 and H1 FY26 conference call hosted by Tamiland Mercantile Bank Limited. This conference call may contain certain forward-looking statements based on beliefs, opinions, and expectations as on the date of this call. The statements are not guarantees of future performance and involve certain risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Today on the call, we have with us following management representatives: Mr. Sali S. Nair, Managing Director; Mr. Vincent Devasi, Executive Director; Mr. Sanjoy Kumar Goel, Chief Financial Officer. I now hand the conference over to Mr. Sali S. Nair, Managing Director from Tamiland Mercantile Bank. Thank you, and over to you, sir.
Thank you, and good morning to all of you. In fact, apart from we also have Ashok Kumar, who is the Head of Resources, and Anand Ganesh, who is the Head of Credit with me. Okay, just to get into the performance for the quarter ending 30th September 25. The big story that we have announced is the opening of the 600th branch for the bank, right? And that is 22 branches have been already opened in the first 6 months, and we hope to open another 36 branches going forward in the current year. So that is where we are, expanding our footprint to accelerate growth. On the financial numbers, when I come into, I think the story again is that the growth is accelerating. This concern that the market participant had earlier, and our own history showed that we were underperforming the market. I think that's something that we have been pushing for, and that's the growth finally is coming back. Is the story I have to say today, and is reflected in the numbers. It is the total business has grown 11.40%. Deposit at 12.32%. So deposit was well underperforming the market in the last few years. It is at 12.32%. And the story is also of CASA revival. CASA is something we lost in the last year, but in the current year, the year-on-year growth is 9.30%, but 92 basis is what we have picked up in the last. CASA share has gone up 92 basis in the last two quarters. In fact, in quarter two itself, it has gone up 58 basis. Advance momentum is aligned to the market, but the momentum is picking up. You will see that noticeable in the next 2 quarters quite substantially. And as usual, the NPA numbers, the stress numbers of the bank has been one of the best in the market. We are at 1.01%. So that is the major one. Of course, the profit is at 318%, quarter-on-quarter 4.14%, year-on-year 4.73%. If you look at the operating profit, it is year-on-year 2.74% negative. There is a story in that we have put out in the presentation itself. Quarter two of last year, the quarter two FY25, we had a return of recovery amounting to 98 crores, which part of it went to the interest income and part of it went to the other income. So 61.65 crores went to the other income, and 36.90 crores went to the interest income. So both these streams of income have been impacted by that recovery. And if you net off that recovery, you notice that the operating profit is not 2.74 negative, but is actually 19.83% positive YOY. So that would impact the net interest income, which sanitized for that is up 6.32%. The total income 9.69%, both I said on a year-on-year basis. And of course, it also will have a direct impact on net profit. I am not stating that number because it has also provisions impact. So The credit cost continues to be under control. It's just about 15 basis. The GNPA has shown a sharp reduction, 1.01%, net NPA 0.26%. ROA has shown an uptick. In fact, it has been going up in the last 2-3 quarters, and it is at 1.85%. ROE has also taken an upswing. It is 13.77%, and PCR. All this has happened without compromising on the PCR, which also has taken 132 basis points upswing with 70.36%. Getting into some of the more numbers, like I said, the CASA is at 9.30% year-on-year growth. Total term deposit, the term deposit at 13.50%, and revival of deposit is a story, one of the major stories of the current quarter. The deposits are at 12.32%. Advances portfolio, the other story is that MSME is also now beginning. We have taken a number of initiatives in the MSME area, which I did recount last quarter. It is beginning to show the quarter-on-quarter MSME is at 3.84%. So that is the other story that we want to put out. The RAM portfolio is up to 94.59%. I think we have been a little slow on the corporate book because of the historical baggage that we had in the form of NPA. So we will get back into the corporate book after we put our, after the systems and the and then the skill set is put in place. At the moment, our focus is not the corporate sector, which has been shrinking, and it will continue. On the unsecured exposure, another concern for the market is our share of it in the total advances is 0.30% with practically negligible NPA in that. US tariff impact, we have just mentioned that yes, we do have a 1.05% impact on export credit, but only 17.53% of that is impacted by the US tariff of this 1.05%. So we are well covered there. I don't see the US impact impacting our book in any manner. Like I said earlier, sanitized for the recovery in FY25 of last year, the interest income has gone up 8.48%, net interest income has gone up 6.32%, and total income by 9.69%. So, and this has added to a very strong shareholder value. The earning per share is at 20 rupees plus. Book value has touched 596.38. I repeat, it is 596.38. ROA continues to have a slight tick quarter on quarter, 1.81% in the last quarter of last year, to 1.82 to 1.85%. I think this is something that we hope will be maintained. 1.85% would be maintained going forward as well. NPA, there has been a recovery and the cash recovery of 26.97 crores in the current quarter, acceleration of 4.34. And overall, we have also written off 66 crores. Overall, the NPA has come down from 549 crores, 549.12 crores to 474.45 crores. This has, like I said earlier, come back on the PCR, which has actually gone up to 74.36%. So that's the other piece that PCR is at 74.36%. And PCR with technical write-off, something that, the market looks at, is at 95.30%. So asset quality, I think it's perhaps one of the best in the market. A net NPA of 0.26%. And slippage is also under control. Slippage is just 5 basis points. And, slippage across the various verticals, retail, agri, MSME, etc. MSME had a small slippage, but across it is well under control. SMA is trending down, and the gross SMA is at 2.67%, SMA 0 0.97, SMA 1 at 0.80, and SMA 2 is also at 0.90. So the SMA category is well under control. The aggregate SMA is 2.67. That means the portfolio at risk one day is at 3.68%. So that's a number that we are sort of fairly proud of. So stress assets, the restructured and the NPA together is at 1.59%. So that's also trending. That's also a number that is clearly trending down. The other point that we would like to make here is the collateral cover of our NPA. We do have, as you have seen, 474 crores of NPA, but it is covered to the extent of 111% by collateral. So when the resolution happens, the portfolio loss is expected to be low, and we have incurred a provision of 323.66 crores, which hopefully most of it should be returned back when the resolution happens. So that is something that's a profit we are sitting on when the resolution happens. Expected credit loss is something that we have come out with. We have done our own analysis. We thought we'll put across to you to tell you where we stand on the expected credit loss. And we have done our calculations, and we noticed that we would be requiring an additional 210 crores of provision. This is coming in the form of additions in stage 1 assets and stage 2 assets. So 210 crores provision is what we look at, and that would have a 73 basis capital adequacy impact. Nothing significant for us because we are sitting on a capital adequacy of 30.96%. So 73 basis is not an impact significant enough. And if you have just 15 basis, if you take the transition route. But let me tell you that currently this bank is sitting on a 250 crores of provisions for COVID and other contingencies. So if I take you back, we had a restructured advances base of 443 crores, and it has come down to 271. We had kept the provision to largely cover that. The restructured advances now come down to 271 crores from 443 a year back, and it's trending down. So this provision is something that we will not be requiring going forward, and this is something that we would be using to take care of the additional ECL requirements. So going forward, when the expected credit loss on the 1st of April 2027 is implemented, we don't anticipate any kind of impact on our P&L. So key ratios, deposit quarter on quarter has moved down 11 basis, 6.01% to 5.90. Yes, and this will continue trending down as the deposit gets repriced into the new rate buckets. Cost of funds, yield on advances at 9.97, and the net interest margin is at 3.83%. Like I said, when the deposit gets repriced, this will stabilize, and we expect this to be at least 3.85% plus going forward. On the capital adequacy, 30.96% is where we stand. Cost to income ratio is at 43.81. This has come down almost 5.5% from the previous quarter, and we are committed to maintaining it under 45% going into the next quarters. PCR, I mentioned technical write-offs. With the technical write-off is at 95.34%. The other piece we would like to bring into the attention of the analysts is the digital momentum that we have. In fact, some of the growth coming back into evidence is on account of several of our initiatives that we have taken. In fact, on the IT side, we will be looking at an enhanced budget of 250 crores. I think a lot of expenditure is happening. We have did mention some of them. Loan management systems, the phase 1 is on right now. It's almost completed. As under UAT, workflow automation is out of the 8 projects, 3 have already been handed over. So that's also beginning to show some results. The website is getting revamped. We are getting into fintech partnerships. We are completely replacing our internet banking package and upgrading our mobile. So there's a lot of activity from a digital, from a modernizing of the bank that is happening. And some of them have already been implemented, like the CX platform, like the vendor management system, like the human capital management and performance system. So they have all been implemented, and we are already seeing some of the results coming into both the growth momentum and as well as the profits. So that's from my side, and we are now open to questions.
Thank you, sir. Ladies and gentlemen, we'll begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use headset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Dijent Haria from Green Wealth. Please go ahead.
Yeah. Hi, sir. So my question is that this quarter, we've seen good growth in RAM, the retail, agri, and, MSME, especially the retail part. So if you can just highlight that, was it like a one-off or, all the initiatives you have taken for the last 1.5 years, how has that impact come together? If you can just give a little more details about, that, and going ahead, will the same growth momentum continue?
We anticipate the growth momentum to continue, and let me also tell you this is not a one-off. When I say this is not a one-off, obviously it will be confirmed by the results of the next quarter and the following quarter, right? I think a lot of initiatives have been taken here. We have put in place the loan management system, which I just mentioned earlier. We have, it is just undergoing UAT. Centralization of appraisals have been, we have brought in. So I think a lot of initiatives have been taken, which is beginning to have a salutary effect. The RM base has been strengthened. The relationship manager base has been strengthened. The credit analyst base has been strengthened. So this is not a one-off. This is the glimpse of what is going to happen in the future. So this will continue.
Right. So would you like to give any guidance for this year?
Let me also put it that way. Yeah. Sorry. Tell me.
Yeah, sir. So would you like to give some guidance for this year, FY26, that, will we be able to do that 13-14% kind of a loan book growth for the full year, or it's still too early to give that?
In fact, this year, we hope to end up with 14% plus, 14 to 15% on the credit growth. And also, taking it further, also on the deposits, I said we will be aligned to the market, but I think we will be better than the market this quarter. I'm looking at 12 to 13% growth on the deposit and a 12% on the CASA itself. So I think both on the liability side and the asset side, we are going to see growth sort of accelerating going forward. It will be slightly better than what we originally thought is possible.
Okay. Sir, and in the last 2 quarters, you had alluded that our ROAs may settle from, say, 1.9 to maybe 1.7 or 1.8 because of the margin pressure. But, last 2 quarters, we have probably done better than that. So you think that worst of that margin pressure is also over?
See, like I said, the repricing of the term deposit, we thought it will take about 3 quarters. And in fact, you look at the cost of deposit has come down 11 basis in the last quarter. So repricing is happening, which will have an impact on the NIM, which is sort of settling down. We hope to touch 3.85% plus, and that also will have a lead lead effect on the ROA, which happily for us has been seeing a uptick. I think we were looking at 1.75 to 1.8. That's the kind. But I think we probably will be ending the year with closer to 1.85. the current level, I think we should be able to maintain.
Right, sir. Right, sir. So that's good to know. And so my last question will be on the, on the retail, on this whole retail agri, this RAM portfolio. What is the overall yield there versus what is the bank level yield?
The overall yield is pretty much the same, right? Because it's about 5% is the other. So what we have is about almost 95%. 95% RAM. But let me see, you have a separate overall yield for RAM alone? RAM separately. I think it pretty much will mirror the current yield on advances.
Got it. Let me just put it this way. What is your highest and the lowest yielding product, and how much will be the yield there?
See, we have a significant gold loan portfolio, right? Jewel loan portfolio. Which, some of it is in the agri space, some of it in the retail space. And the agri gold loan portfolio, agri jewel loan portfolio, the yield is 10.15%, right? I think that remains at, and the consumption loan, now we are, the retail side, what we call the consumption loan is at 11%. So that's something that's steady, supporting. RAM 10.05. Yeah, I got that RAM yield. It is at 10.05.
Right. Right. Thank you so much and all the best.
Yeah, thank you.
Okay.
Thank you, sir. The next question is from the line of Siddharth Chandrasekhar from SJN Securities. Please go ahead, sir.
Hi, sir. Am I audible?
Yes, sir, you are.
Sir, I have two questions. Basically, the first question is about the shareholder case which is going on, right? So, is there any potential impact in our company? Basically, what I meant is, say for example, whatever outcome that comes out of that case, right? Will there be any monetary impact, like any fine or issue of new shares or cancel of new shares, something like that?
I'm sorry, I think it's not clear. What is it that you're asking? You mentioned something about shareholders.
Yeah. Is it any better? My voice is any better?
Yeah, it's getting better. Yeah, tell me.
Okay, so what I meant is regarding the shareholder case which is going on, right? Will there be any monetary effect on our company depending on wherever, whatever outcome that comes out of that case?
Oh, no, nothing at all. In fact, we have put it out in the last balance sheet in the fine print. If you look at it, it's very clearly there. See, where the bank came into picture, it's actually an issue between shareholders and issue between shareholders and the ED. Where we came into picture is that when we issued the bonus shares, 1:500 when we did, prior to listing, we issued to everyone, including those impacted by it. And ED did not like it and issued a showcase notice to us and slapped some thousand, equivalent amount as showcase. They issued a showcase notice to us. But this is under a certain section of FEMA. I don't recall the FEMA. When we look at that, the maximum penalty there is 2 lakhs. 2 lakhs, right? 2 lakhs. And that we have already provided for that. We got the legal opinion from the top legal firm in the country to go through the papers and see what is going to be the impact. Because there is no money laundering angle to that. What we just did was the existing network which was there for one share, which was converted into 501 shares. So there is no exchange of cash. There is no cash transaction happening here, which has been acknowledged by the top legal firm, and as per their advice, we have already put a 2 lakh provision, which is the maximum provision or maximum penalty possible from the ED side.
Okay.
In fact,
that's good to hear.
Already.
Okay. Sir, one more question about our deposit portfolio. So you mentioned that we are aspiring to somewhere around 12-13% for deposit for this year.
Yes.
So year to date, we did around 3%. So I think the remaining 9%, can we achieve this, or is it possible?
Oh, yes. I think 3% is for the quarter. What we are talking about, 3% is for the quarter.
Yeah, the prior quarter was kind of flat, right? So the Q4 versus Q1 is kind of flat. So year to date still.
Yes, I think your question is valid, and let me tell you the kind of momentum that we see on a month-to-month basis. Look at that. We always overachieve. Let me tell you, when we give a guidance, and you have seen it from the past also, that we will exceed. And the confidence comes from the fact that, the growth momentum, we are seeing it happen on the ground. The initiatives are beginning to pay off. We did take Transaction Business Group, which is again beginning to pay off. We have set up an elite services group, which is also beginning to help us in the overall term deposit and the savings bank side. So I think 12% to 13% is where we will see the year close. And if you are asking 3% and the year was flat, you will see at the end of the year it will be there.
Okay. Yeah, I'm good.
Yeah, thank you.
Thank you, sir. Next question is from the line of Parth Manish Gutka from VNK Securities. Please go ahead, sir.
Yeah, hi. Thanks a lot for the opportunity. Sir, can you just mention what is the TWO pool as of date?
What is that? Can you repeat, please?
What is the outstanding technically written off pool as of September?
Okay. Technical written off. TWO. Okay. Right. I think it is a little under 2,000 crores at the moment. But that is, we have never moved assets out of technical written off, so it's the baggage of several years. Yes, that is there.
Okay, fine. And
if you look at the PCR, right? Now we are focusing more on the PCR without the technical write-off, that is at 74.36%. So the on book itself, we are pretty well covered. And like I said, the collateral cover of our NPA, current NPA on book is 111%.
Okay, fine, sir. And the contingent provision buffer that you are carrying of around 250 crores.
Yes.
Will we require any RBI approval for using that for ECL, or we can go ahead without taking the approval?
I don't think there is any requirement. I don't think there is any. In fact, it was meant for such contingencies. So there will not be any RBI approval required.
Okay.
Ordinarily, this would be returned back into profits. Ordinarily, as the restricted, the COVID assets come down, gets paid down. Like I said, it is already, it has been sharply reducing. It will be returned back into profits. We will not be doing that. We will be just using it for the easier.
Sure, sir. That's clear. And one last question. The employee expenses have declined around 20% quarter on quarter. Now, I'm assuming that would largely be because of the lower retirement provisions this quarter. So can you just mention what is the share of the employees which are on defined benefit?
Let me also, that's one of the major step that we have taken, reform that we have taken, is to shift our employee base, about 5,000 people, employee base from the defined pension, defined IBA-based pay model into the CTC model, where we don't, look at the pensions, right? And I think we have now largely been successful in that. About 82% of our employees today is on the CTC model. And not only that is one major step that we took. I think going forward we'll be getting the benefit of it. And apart from that, there's a variable component that we have offered them. That variable component also now in another major step. Last month we have aligned that to the operating profit and the business growth. So that's, and now again you will see the impact of all that going forward.
Sure, sir. Sure. Thanks. And just one last question. What is your outlook on the others? So within the advances portfolio, there's an others portfolio around 2,500 crores.
Others is actually the corporate book that we have. I think it'll be around that level, and maybe we will start looking at it after we have put our systems in place, people get familiar with the new systems, new way of, handling appraisals, which I did mention that the LMS, we have just completed the LMS loan management system. We are getting the LOS in place. Once our staff and officers get familiar with that and the appraisal skills moves up, we will get back into the corporate field. The others is actually the corporate book.
Sure. Thanks a lot.
Thank you, sir. Our next question is from the line of Arul from Seema Wealth Management. Please go ahead.
Hi, thanks for the opportunity. Am I audible?
Yeah, please.
Yeah. In first half of FY2026, we have opened 22 branches, so majorly in Tamil Nadu. So what is the plan going forward? We have some 36 branches to be opened. So majority it will be in Tamil Nadu, it will be other states.
It will be this year, the ones that will be opened, 24 of them will be in Tamil Nadu, but 12 of them will be 12 of them will be outside Tamil Nadu. But going forward, you will see the ratio changing.
Okay, so currently it's around 75% of branches in Tamil Nadu. So what is your view in the for a medium term or long term perspective?
Our intention is over the next 3 years to bring down or take up the non-Tamil Nadu branches to beyond 35%.
Okay, understood. And second question on the gold loan portfolio. I believe most of it is retail only. Some of it is agricultural also. Suppose what will be the impact on growth if the gold prices came down in future?
There will certainly be the gold growth is not just coming from the gold price alone. It is also coming from the fact that 47% of our branches are in the semi-urban and 21% are in the rural. So it is also coming from the expansion of the number of customers. So yes, your gold price reversal will have an impact on the gold loan growth itself. But now the focus is on the expanding the customer base also, which will to a very large extent cushion that impact.
Understood. Thank you. Thanks for this.
Thank you, sir. Our next question is from the line of Manish Jain from Wealthcare Security. Please go ahead, sir.
Yeah, thank you for the opportunity, sir, and congratulations for a very good set of numbers. Sir, my question was in the previous con calls, you had mentioned FY26-27 will be a breakout year. So, do you think that we'll be able to do a 20-25% growth in profits in FY26, FY27?
FY27 we maintain will certainly be a breakout, and the profit 20-25% on a what will be the profit approximate? It'll be 18 to 20%, right? No, let's see the number. I think it'll be certainly in the round maybe 3% plus minus 20%.
Okay.
Right? Because we are also doing a lot of investment in the technology. And in fact, the planned investment in technology in the current year itself is about 250 crores, which was about 151 crores last year. So there will be some impact on the OPEX, though we are committed to maintaining it at 45%. But like I said, next year is certainly going to be a breakout year. But we are looking at various parameters to see how it will impact the profit, and the profit, like I said, should be in the 20% plus minus 3%.
So suppose if it is let us assume it even if it is 17%, but that will be sustainable for the next 2-3 years at least.
Oh yes. See, if you look at the past history of it, like I said, the growth is coming back, right? In the past through several years, substantial amount of our profit actually came from what we call return of accounts, right? In fact, in this quarter itself, the return of account has had an impact in the numbers, in the YOY numbers, because we had a 98 crores of recovery from the return of account in quarter 2 of FY25, which is now down, which is about 13 crores this year. So the impact of HOT, this return of account, is slowly coming down, and that growth is picking up, which means that, going forward, the profits that you see on the table today will not only get accelerated, it will also be sustained.
Okay, sir. My second question was regarding the unseasonal rain and the impact on our asset quality, and plus the USA tariff. I think you had mentioned it in your opening remarks, but still, if you can be written more in detail, you can explain about
in fact, I put a slide on it in the presentation, because last time also there was a mention of US tariffs. We don't see the way the bank's portfolio is structured, and the fact that we rely on significant, recourse mechanism in the form of collateral. We don't see that impacting any kind of portfolio stress, because the export credit focus of ours is just about 1.05%. No, this is one area we will be looking at ramping up going forward, but unfortunately at the moment it is at 1.05%, which is sheltering us from the US tariff.
Sir,
and the US
about this
focus of that is just 17.53%. Sorry?
Yeah, about this unseasonal rain, we don't see any impact on our asset quality?
Unseasonal rain, the agri sector that we have, focus on the agri sector that we have is significantly contributed by agri jewel loans, gold loans.
Yeah.
So rains does not impact at all, because it is backed by the gold.
And sir, about this IT budget, which is for the current year, it is 250 crores. Out of which, how much we have spent already?
Quite substantially has been done already, right? I'll get you the number.
And for the next year, what will be the budget, sir, for FY26-27? Will it decrease substantially?
No. I think this is the modernization will continue, and you have the number. It will. We'll take a call. We'll see how things are moving. But technology is something that this bank is heavily investing in. This bank is modernizing itself, because we are seeing the productivity impulse realized, and that would also weather the cost of such investments.
And despite of all these expenses, we are confident that next year will be at least 17% profit growth will be there for.
Yes. And let me tell you, we always understate our performance.
That was very nice to know, sir. And sir, another question was regarding, out of the total loan book, how much originates from Tamil Nadu, and same for the case of deposits?
See, it is roughly 3/4 is coming from Tamil Nadu, a little over 3/4.
And we are okay with that, sir, or we want to change it?
Oh no, we are. That's why I said going forward, we are identifying centers to open more branches outside the state of Tamil Nadu. See, why we are going a little slow on opening at the moment is we would also simultaneously put in place the HR strategy for that. Tamil Nadu branches, non-Tamil Nadu branches cannot be opened by the existing HR resource. So we have put in place. We have just entered into a strategic tie-up with Manipal for training a set of officers recruited from outside the state of Tamil Nadu. In fact, that process is already on. The first contingent is in the Manipal University, getting trained on a 6-month program, and they will be absorbed straight away as probation officers in the bank. We have also used the IBPS route to recruit about 115 guys earlier. So the resource is something that we are looking at contracting before we sort of enhance our foray into the non-Tamil Nadu region. That's why I said this in the next 6 months, 12 branches will be opening, but going forward, the number will be ramped up as the resource, non-Tamil resources, human resources are beefed up. So these are the two strategies we are using, the Manipal and the IBPS route for, recruiting people, local to the states, to manage our branches.
Sir, and despite of all these branch opening expenses as well as these IT expenses for FY25-26 and the following years, so you are very confident of at least 17% profit goals, right?
Yes.
Okay, sir, that was very nice to know, and thank you for answering all the questions, and best of luck, sir.
Thank you. 17% is next year, not this year, okay? FY27. Hello?
So he left.
Actually, he's FY27. We should not get that. FY26, we are going to deliver a 17% growth. Okay.
Thank you, sir. Our next question is from the line of Jefferson. He is an individual investor. Please go ahead, sir.
Okay. I hope my voice is quite clear and audible.
Yes, sir. Yeah.
Thanks for confirming. Hello, sir. My first question is on how we are actually selecting the locations to open the new branches, because I remember our former CEO mentioning that, we are primarily choosing locations where we could have a quick break-even. Is that still the selection criteria, or has it changed now?
See, what we are doing is we are going by the data across the country, centers which are, which have potential which have existing branches, and we are looking at the growth of these existing branches. Now the data is available. That is the first level of identification of the center. The growth of branches of other banks already existing in the center. We are looking at their growth and see to judge the potential. That is one. And second is that wherever we are looking at opening a branch, we are posting the branch manager in advance. He goes, does the survey, identifies the branch premises to be taken, and the survey also will give us an indication of whether we can make a dent there. We can break even quickly enough. So I think these are the two strategies that we are looking at before opening a branch. Identifying the growth at the branch through the growth in by the branches of other banks, as well as our own market survey, backed by the person posted there and the regional office support in that market survey. So we're not looking at opening branches, just for the it. We will be doing a serious study before opening a branch.
Understood. Yeah, that's quite clear. And I have an observation. So obviously, one of our bank's future goal is to have a pan-India presence. But keeping that in mind, if you have a look at our bank's name, it's Tamiland Mercantile Bank, and it seems to somewhat limit us or kind of associate us with a specific geographic location, right? And also, one more point to add is, since our bank name starts with the letter T, it kind of already puts us into an alphabetical disadvantage. In almost all cases where, let's say, the banks with the universal banking license in India are listed alphabetically, our bank most probably ends up being the second last on the list. So actually my question is, would we consider renaming our bank's name, maybe as a part of rebranding effort, or what's your thoughts on that?
I think that's a very interesting question, really. One, of course, I never realized that, letter alphabet T is virtually at the bottom of the 26 pack, English alphabet pack. I think the alphabet T is going to remain in the bank's name. I think that's something that we can't escape from, right? But on the Tamil Nadu Mercantile Bank being a limiting factor is something that we are looking at. I can't give you a straight away, acceptable answer straight away, but that is engaging our attention. How do we enhance our attractiveness to the non-Tamil Nadu regions is something that is engaging our attention.
Yep, understood. Thanks for answering this.
Yeah.
Thank you, sir. Our next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead. Mr. Saket Kapoor?
Yeah. Am I audible, sir? Namaskar.
Yes,
you
sir.
Can hear me, sir? Is my voice echoing, sir? I'm unable to hear.
We can hear you,
Hello.
sir. Please go ahead with the question.
Yes, sir. Yes, sir. My question pertains to the IT investment that we have envisaged over the years of 250 crore for this financial year. So if you could just explain to us what has been the thought behind spending 250 crore, and even you are articulating that a similar amount needs to be invested. So are our systems not in place, or what will lead to this amount going ahead, and what has been the average IT spend for the last 3 fiscals?
I think last year I just mentioned that we did spend 151 crores. In fact, out of the 250, a substantial portion will be reserved for the OpEx. So that's one. And is now what we are looking at in the current year is a breakup of even breakup, which is 125 crores for the OpEx and 125 crores for the capex. I think that's how we have. And there's a the bank is a legacy bank, and a significant portion of its functioning has been manually driven. So all that we want to modernize. For example, I just mentioned about the loan appraisal systems. It was manually done. Now we are putting in place a new loan management system. We are replacing the entire internet banking through a digital engagement hub-based internet banking. So that's a big investment that we are doing. You will see that result in January of 26, when the entire internet banking will be replaced. Wholesale, it will be replaced. The entire website is being replaced wholesale. The mobile banking is completely being revamped. Like I said, our workflow automation, I think that's something that we are pushing. The way we are doing work in the branch, every aspect of it, we are looking at upgrading and automating, and so that resources are released for sales functions. We were largely a maintenance-based bank. Now we are now trying to push the staff into the sales roles, and towards that we have also now set up the CX platform. The other big investment that we will be doing is on the CDP side, the customer data platform. That is yet to happen. That is the next thing that will happen. So virtually every aspect of banking, whether it is customer facing or internally, which will release productive impulses amongst our own resources, human resources, is something that is being looked at. And we are also put in place a cross-functional team to see how artificial intelligence can be used to support productivity increases here. And let me also tell you, in the HCM, we have just started that that already by having in the artificial intelligence used there. So I think there's a substantial investment happening. I think this will go on not only this year, it will go on till next year, by which time we hope the bank will be completely modernized and in line with some of the best in the market.
Okay, sir. Sir, you mentioned about the employee cost being lower because of some changes, in 82% of the staff being shifted to the city model. Can you explain what does this stand for, and what would be the annual savings going ahead, sir?
Let me tell you that we were these employees here, 80% plus was on the IBA model. The IBA model where you give every 5 years increase in the basic pay, and the salary structure undergoes a change. Now that has been shifted substantially into the CTC model, where the salary is now being split into two. There's a fixed component, there is a variable component. and the variable component is now linked to the operating profit, to the business growth. So that component kicks in only when there is a profit, which means straight away that's savings, which was, you used to give a certain performance-based incentive, is now linked to this and becomes a function of the profit itself. So, which means going forward, we can see there's a moderation of the HR costs happening. The HR costs may go up, but then it will, as a percentage of the overall, profits or operating profit will go down, or the total income will go down.
Sir, come again with the last statement. Income will? I missed your point.
No, because we are, like I said, no, the absolute number HR costs may go up. But as a percentage of the total income, because now the operating profit, the growth has to be generated before we pay them the variable, which was right to them earlier. We can see that the absolute in percentage terms is going up.
And so the pension benefit part, are they covered? Are the existing employee under the pension benefit also?
The CTC guys are not covered under the pension. So 83% of our people are not covered under the pension now. It is only the balance. We are also trying to incentivize them to move because, incentivize through the variable pay structure to move into this. And we are on the actuarial basis, we are well covered under the pension. The existing, like I said, 17-18% who carry pension, we are well covered on an actuarial basis.
Okay. The last 2 points, sir. Firstly, on the interest on balances with RBI, we have seen our sequential number also in 9 months. From 17 crore profitability, the number is 15 crore. However, there has been the impact of the CRR and the repo rate cut. So how are we able to maintain the interest balance with Reserve Bank, and what should be this number going ahead, sir?
Sorry, come again on that? Come again?
Sir, I'm talking about interest on balances with Reserve Bank. We are showing an income of 15 point.
Yes, it has come down from, you are saying from 4% to 3%, right? You are talking about the CRR.
Sir, I'm talking about the CRR, but we have been able to maintain our number on a quarterly basis. Yeah. So what are the reasons and what should be the number we should look forward on an annualized basis, sir?
Can you answer that?
Can you come again with what is basically you are asking?
Yes, sir. I am just referring to the PNL. Line item 1, subsection C, where we have mentioned on interest on balance with Reserve Bank of India and other interbank funds. Therein we have booked an income of 15 crore 34 lakh for the quarter ending September. The number was 17 crore 38 lakh for June quarter, and for previous year it was 6 crore. So I would just like to understand, since there have been a rate cut that has been factored in the quarter, how are we? Yeah.
Basically, investable surplus is being deployed here, and that is the function of this. Once our advance portfolio starts growing up faster, that surplus will come down, and so this number cannot be compared in isolation. We have to see this overall interest income, because what happens is this is my total fund has to be employed either in advances or with investment in RBI, which is giving me less yield. So if whenever this number going down will be beneficial for my bottom line.
Right, sir. But my question was, since that there has been a significant reduction, how we have been able to maintain this number?
Now, that is the thing. Our investable surplus with RBI is at a level where we are giving these kinds of returns.
Which line item is you referring to?
1C.
It is not here. It is
1C.
Well, I understand.
And secondly, sir, what steps we are taking to protect our NIM going ahead, since the there should be a further 50 basis cut in the repo rate in the issuing part of the financial year. So how will our NIMs be protected? And you alluding to the fact that 17% growth in the profitability for the next year, that should be on another 50 basis cut that is envisaged in the repo rate. So are you factoring in this 50 basis cut in giving a number for profitability growth of 17%?
Yes. Let me tell you why. See, if you look at our deposit portfolio, substantially we are in the 1 to 2 year bucket. About 66% plus is in the 1 to 2 year bucket. And that is now will be repriced going forward. The next 2 quarters, going up to April 26 is when this repricing will happen. And that will give us that extra bit to even take care of 25 basis cut when it happens, and maybe a 25 basis cut going forward. See, every cut will impact to about 7.5%, and because of the maturity profile that we have, it takes about 3 quarters for the pricing to fit in. The last cut that we saw, now the pricing will be, the deposit pricing would, take that impact and give us a benefit. We are coming to that in this December quarter and January quarter. We hope to see the benefit of that.
Okay. So our loans are repriced on a floating basis, but the deposit gets affected with a lag.
50% gets repriced, and of course the balance 50% on MCLR terms, the repricing. So essentially, half of the loan is getting repriced immediately, whereas in the bulk of our deposit, except for the very short-term profile, it takes time to reprice. Like I said, 3 quarters.
3 quarters. So we will be getting the benefit of the lower cost of funds. This trend line of lower cost of funds will continue and will get momentum only going ahead.
Yes, and possibly that will also take care of a rate cut.
Yes, sir. That is what I'm asking. Our cost of fund has come down to 5.91 as a percentage.
Yes.
It will continue further down since the deposits get repriced in this quarter itself.
Absolutely. Next 2 quarters, we are seeing a substantial amount of deposits getting repriced.
Okay, sir. Right. So, and sir, we will be hosting the call again to approach the March result from this. The next call will happen after our
January, no.
No, okay. We'll continue with the quarter.
We will have.
Okay.
And
Mr. Kapoor.
Numbers will...
Yeah, please.
Okay.
Thank you. You were telling something. You were concluding, sir?
No. I'm saying we will again meet for the December results in January. And we hope the numbers will be better than the second quarter.
It will be better than the second quarter numbers. Yeah. Thank you for answering all the questions, sir. And we hope for now the deliverables to show up in our numbers in the way as being alluded by the management.
Yes.
Thank you, and thanks.
The confidence comes from the fact that the growth momentum is, picking up, and it is already evidence in the second quarter, and it's also getting evidence as I see it in the month of October as well. Yeah, going forward, we expect that momentum to continue.
Just a point to add, sir, again, moderator, sir, only one point was that, sir, we are not seeing the...
Mr. Kapoor, I'm really sorry to interrupt you. Mr.
Okay,
Kapoor,
fine. Yeah. I joined the queue, sir.
Please rejoin the queue. Yep.
I joined the queue, yeah.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all the participants and the conference, kindly limit the question to 2 per participant. Should you have a follow-up question, please rejoin the queue. Our next question is from the line of Anant Mundra from My Temple Capital. Please go ahead, sir.
Hello. Thank you for the opportunity. Sir, my question was on the cost side. So firstly, the credit cost has been quite low in Q1 and Q2. So just want to understand on a normalized basis, where do you expect this to settle? And also on the cost to income side, there's been some volatility between Q1 and Q2. So what is the normalized annualized number that we can model in here for cost to income?
And second, just a follow-up on the ECL thing, you mentioned that we carry a 250 crore provision for the COVID provision. Do we use that currently for our calculation of our PCR, or this is on top of that, whatever provision that we already hold?
Anand,
yeah, these were the two questions.
Three questions. I didn't get the second one. Maybe you can repeat it, but I'll give you the answer for the first two. Right? And the last question is about 250 crores of contingency provision that we have. It is not a part of the PCR.
Okay.
If it is part of the PCR cover, provision cover would exceed 100%. You obviously, because your net NPA is.
Yes, it will exceed 100%. Yes, sir.
100%.
Right? It will exceed 100%.
Yes.
So it is not, not part of it. And that's something that, it has been kept aside for the COVID era. Now the COVID book is now sharply shrinking, and it is now standing at 271. I think there are the options that we have is to write it back to profits going forward, or use it for other purposes. So I think ECL is something that we will certainly use that. Okay. And on the credit cost, when I look the book as it stands for the next 2 quarters and certainly for the next 2 quarters, I think the credit cost, we don't see any kind of spike happening at all. The current level will be maintained. But let me also tell you, as the growth momentum picks up, you can't avoid a bit of stress. I think going forward, this is something that FY26 and certainly not FY26. We will be at the similar levels, but FY27 maybe there could be some kind of stress coming. I still anticipate the GNPA to be in the 1% kind of range, and obviously the credit cost should be well in the 0.25% to 0.5% range going into FY27 and FY28.
We asked about
answer on the cost to income side as well.
Cost to income ratio is at 43.81 now, and let me also tell you that we are committed to maintaining it in the 45% kind of number.
Okay. All right, sir. And so this 43%, so you also mentioned that most of the IT expenses are done. So both on the CapEx side and OpEx side, both of them are majorly done?
No, I didn't say most of the IT expenses have been done. Has been contracted, and the payments will happen. Many of them are work in progress. For example, digital engagement hub that we took will go live in the month of January. The loan management system phase 1 we are going live now, but phase 2 and phase 3 we will go live in the next 2 quarters. So it is all work in progress.
Okay, got it. So this 45% number that you mentioned is on an annualized basis, right? Because Q1 is generally a spike and then, okay, all right.
Annualized basis, yes.
Got it, sir. And sir, just one final question. What is the LTV on the gold loans that we have in the agri and the retail portfolio?
Oh, we are fairly conservative there, but you have the LTV. We are fairly conservative there. I'll get you the LTV number. And, if you look at, against the market, our highest per gram rate continues to be at 7,300.
We are the lowest in the industry.
Right, we are the lowest, practically one of the lowest in the industry. Of course, we will continue to focus on the gold loan, but what we intend to do is to grow the non-gold loan book, particularly MSME, and that is where we seems to see some kind of a growth coming back.
Got it, sir. So the investment on the MSME side are done now. That engine should start firing, like how we've seen for the retail.
It's not done. If you say to say it is done, it is not really done. It is still in a work in progress. Like I said, the LMS package that we have taken on is only the phase 1 has been completed. The phase 2 and phase 3, the post disbursement functionalities, etc., are still still, there's a lot to, I think it'll take another couple of quarters for it to be fully done from what you're asking whether it's done. So,
Okay.
but we are
For
still
meaningful double-digit growth. Got it. But the meaningful double-digit growth should only be penciled in probably for next year then, because given that it's still under implementation.
Yes. The next year, I think, is going to be another year that you should watch out for.
Got it, sir. Thank you, sir. That's it from my end. Thank you.
Thank you.
Thank you so much. Our next question is from the line of Vineet Jain from Siddha Capital. Please go ahead.
Thank you, sir. So my first question will be, can you give me the size of the jewel loans and the consumer loans?
The jewel loan portfolio is currently about 20,000 crores.
Sorry?
Yeah, it is 21,000 crores.
21. And what will be the size of
that we have? The jewel loan size is, when I say jewel loan, it also has got an agri component and a consumption loan component, right? So both together is about 21,000 crores. So
what will be the size? Yes, continue.
What is the?
So what will be the size of the consumer loan right now, sir?
Consumer loan is about 4,300 crores.
4,300. So how do you envisage the growth in consumer loan going ahead, sir? Like, of course, it is part of the retail and the retail is growing. So is the focus more on jewel loans still, or are we moving away? Like, of course, you said we are moving away from jewel loans. So what is the category we are focusing on?
Like I said earlier, we will continue focusing on the jewel loan, but jewel loan is price sensitive to the gold prices, right? So if it takes a turn, we don't want the growth to taper off because of that. We are very, very sensitive about the per gram rate that we offer in the market, and that it should not lead to a stress situation if there's a sharp reversal of the gold loan prices. So that's something that we are looking at and we are trying to see. But like I said, the focus will continue on the jewel loan. But overall credit growth, we expect it to come from the non-jewel portfolio. I think that's where the focus is. That is where salutary, I think the last few months we can see the turn happening. The growth of jewel loan portfolio versus the non-jewel loan portfolio happily is shifting in favor of the non-jewel loan portfolio, which is the MSME and the other retail side.
So is it possible to give these numbers in the presentation, like the jewel loan, consumer loans, home loans, or the vehicle loans?
Take note of it, and hereafter I think we will see whether we can give. I think that's a good suggestion. Let us give it. So they will get some.
So on the MSME segment, we've been working on the centralized loan disbursal system for some time, and you're saying that there's still more time to get the engine firing. So when do you expect it? So maybe a couple of quarters down, or?
Like I said, the LMS phase 1 has just been done, right? And now I think the familiarization is on in one of the regions. And I think come November end, I think that LMS will go live across the bank. Okay. And you can see the impact of that in the quarter 3 results itself.
So the awareness program among the staff has been completed, you want to say?
Yes. In fact, awareness program or familiarization is on at the moment. Any change, it is not like a tap opening the water and the water comes out. It takes a bit of time for the people to get familiar. But nevertheless, you will see the impact of that in quarter 3 in terms of growth numbers.
So, and on the global NRI center at Kochi, what has been the progress? What are the benefits we are generating?
We have already set up the global NRI center, right? Okay. And we are also seeing an uptick in the I think that also went up about 9%, right? The NRI business, NRI deposits are also beginning to show some growth. And we have just set up, I think, the DNC has been set up in Cochin in Onam. in last month. I think Onam period, Onam day, we did set it up, and we are beginning to see the impact of that also on the deposits.
Will it be possible to give you the number?
We will put that NRI number also for and the comparative number also in the next quarter, and you will see that its uptick is there.
So the deposit side also, this presentation doesn't have the breakup of the retail and the bulk deposits. So.
Oh, okay. We'll add that.
So can you give me the numbers also?
You have the numbers straight away? I'll give it to you. Okay.
Okay.
Yeah.
Thank you very much.
Thank you, sir. In the interest of time, we'll take this as the last question. I now hand the conference over to Mr. Salias Nair, Managing Director from Tamiland Mercantile Bank, for closing comments. Thank you, and over to you, sir.
Yeah, I think, like I said initially, I think this quarter, some of the efforts that we have been painstakingly undertaking in the last 2-3 quarters is beginning to bear fruits. The growth momentum is coming back. 11.40%, as I just mentioned, is the total business growth, particularly on the resource raising side. I think 12.32%. The deposits is evidence that the efforts are bearing fruit. And if you look at the history of the bank going back about 10 years, the bank has been underperforming the market. Now it is in line with the market, perhaps a tad above the market, and I'm fairly confident that going forward, this bank will be not only be in line, the divergence with the market will be seen. That will certainly grow slightly above the market. And for the current year, we hope to end the year with at least 12 to 13% growth on the deposits, CASA at about 12%. I think we are confident about that. And the total and on the advances, like I said earlier, 14 to 15%. Despite the fact that it is at 10.34, we hope to end up with 14 to 15%. So that's again the confidence coming out of the fact that some of the initiatives that we have taken is beginning to bear fruits. Yeah, NPA would going forward also will be under control. I don't see any challenge there, any major account slipping. We don't see that, and of course, that also the slippage ratio also will be in the current level of about 5 to 10 basis. So overall, I think we are facing the future with confidence, and we are happy that the growth is coming back. That will now start contributing the profits. The profit which had a significant component of recovery from advances under collection, return of accounts, and now will stand up on its own feet, will be driven by the core banking going forward, core banking business going forward. So we face the future with much confidence than what we were used to in the past. Thank you all for joining us in this call. Thank you, and it's over to you.
Thank you, sir. On behalf of Tamiland Mercantile Bank Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.